the fact that there are more buyers and sellers, at least at a national level still.
I mean, it is that double-edged sword.
Our townhouse market at the moment is we don't have enough townhouses, but we've got too many buyers.
As spring warms up, so too does the property market, with buyers traditionally turning out in droves. So how is 2024 playing out? Who's buying? Where are they buying? What external factors are having the biggest impact on this year's spring selling season? Joining me today to discuss the state of play is Eleanor Creagh, Senior Economist at PropTrack, and Peter Diamantidis, Director and Selling Principal at Ray White. Thanks both so much for joining me. Spring has always been seen as a prime time to buy and sell property, and ideally, if you do buy in spring, you can be in by Christmas. Eleanor, can you give us a recap on the 2024 market to date? What has the first 8 months looked like?
So it's been a really interesting year so far. We've seen that slowdown that we saw in home price growth recorded toward the end of 2023 really reversed in early 2024, and prices were rising at a pretty fast pace in most markets. And really, it was the expectation that interest rates would fall in the second half of 2024 that drove that bounce in activity, I think, earlier in the year. But since then, interest rate expectations have been on a bit of a roller coaster ride. However, we have still seen that housing demand has been strong this year. It's been buoyed by population growth, very tight rental markets, resilient labour market conditions, and of course those home equity gains of recent years. Meanwhile, we've also seen that building activity has remained constrained, and that's exacerbated that underlying chronic shortage of housing, and prices have continued to lift throughout most of the year, though now at a slower pace than that faster pace we saw earlier in the year.
What about for September specifically? Did we see an increase in activity, or which states are booming? How's everything looking?
Now, in September, we have seen that the pace of price growth has cooled in most markets. And really, it's a number of factors playing into that. I think it's a little bit of uncertainty around when interest rates are going to move lower. It's also that uplift in choice that we've seen for buyers as well, which has helped to cool the pace of price growth. And of course, the sustained higher interest rate environment and affordability constraints starting to bite. Although behind the headline numbers, so we saw national home prices lifting 0.04% in September. That's a pretty small lift. But behind that headline number, we've seen a lot of divergence across the various capital city markets. So it's Perth, Adelaide and Brisbane that are really continuing to lead growth and activity around the country, with prices in Perth up a little more than 22% over the past year. So low stock levels in those markets are continuing to really intensify competition. And even though we have seen the flow of new listings hitting the market increasing in those markets, with the strength in buyer demand, we're seeing that flow of new listings is quickly absorbed, and total stock on market still remains well below prior 5-year averages in each of those three capitals. Then at the other end of the spectrum, we've got Melbourne and Hobart, where prices are falling. So in Melbourne and Hobart, prices fell 0.3% in September, and really in each of those markets, buyers have consistently enjoyed a lot more stock on market relative to history and relative to other capitals. So in Melbourne's total stock on market is around 40% above the average seen over the past 5 years. It's a similar story in Hobart. Of course, in Victoria, we've got a few other factors like the higher property taxes and changes to tenancy laws, which might also be influencing that weaker growth momentum that we're seeing there.
Peter, talk to us about your patch in Western Sydney. How has this September compared to, I guess, earlier in the year where maybe you did experience that kind of really high boom, high pace?
Well, what we've been finding is in the beginning of the year compared to where we are now, there is definitely more listings coming onto the market. We found probably in the last 60 days, let's say the last 2 months, we're getting a lot more call-ins, a lot more people looking at making the move before Christmas. So our offices, we've got 4 in total. We had our biggest month on record of nearly 85 transactions. So in September, out of the 85, we had nearly 44 were first home buyers entering the market. So now going into October, there's a number of listings now starting to, I think, roll onto the market. And I think that's going to continue on all the way until Christmas.
How does that compare to previous years?
Well, if you work on, say, last year, we were desperate for stock. There wasn't stock on the market in our patch and we were hunting for it. But compared to this year, definitely, I reckon we're up nearly 50% more stock, especially with the areas that we service.
Yeah, I mean, it stacks up. Our data says that 44% of sellers do think it's a good time to sell. It sounds like you're experiencing that sentiment in your market.
Yeah, definitely. We've told sellers we were seeing like very strong growth and it started to just not plateau out a little bit, just the growth, it's not increasing. So we're trying to get owners to come onto the market sooner. Some owners are actually saying, well, we're waiting for, the children to finish school and so on, but we're trying to get them on the market now in October and hopefully then settled or even with longer settlements until early next year.
So, Eleanor, does this mean that the market is starting to switch and become a buyer's market given there's quite a bit of choice?
I think it's really about where in the country you are sitting at the moment. So we talked about that divergence that we're seeing in growth across the different capital city markets. And a lot of that divergence that we're seeing is being driven by the balance between demand and supply conditions. So certainly I think when you're looking at Perth, Adelaide, Brisbane, those markets where prices are still growing at a pretty fast pace and total stock on market remains very constrained relative to prior 5-year averages, those markets are where we're seeing sellers really hold the upper hand in spring. And that's likely to remain the case, I think, throughout the rest of the spring selling season, even though we're going to continue to see more properties hitting the market in those capital cities, which probably will work to continue to cool the pace of price growth, but certainly sellers kind of holding the upper hand still. But it's a different story, certainly in Hobart and Melbourne, where buyers have held the upper hand for quite some time. And I think it's a changing picture in Sydney. So we saw actually in August that Sydney, Melbourne and Canberra buyers had the busiest August for new listings in well over a decade. We've seen that new listings have remained strong into September as well. And of course, I think with that uplift in choice, we're seeing that balance of power in Sydney is shifting.
Is there any data that indicates that there are more loans being approved than what there are property listings? Is that even something that we can look at?
So for most of this year, looking at national new listings volumes on realestate.com.au, we can see that they've lagged the number of new loans approved in any given month, largely for the year to date, although that doesn't adjust for market share. But it does suggest that a broad indicator of the fact that there are more buyers and sellers, at least at a national level still. And I think that's reflective in terms of what we're seeing in current market conditions. We know that those demand-supply imbalances are driving very varied performance across the capitals, and stock on market is certainly one of those many factors that influence price growth. And I think that influence of stock levels is really evident in those outperforming capitals at the moment.
Peter, if there is more buyers than sellers from a national perspective, if we just drill down on your patch for a moment, do you think there's an even spread of both, or are the buyers very much outweighing those selling?
Well, what we're finding is different categories. So if we went from, say, apartments, townhouses or houses, our townhouse market at the moment is we don't have enough townhouses, but we've got too many buyers. And then if you go to, say, your apartments, at the moment we've got too many apartments, not enough buyers. So it's a bit of a mixture. So if you drill down overall, it probably evenly spreads out, but we're just still finding at the moment it's probably 50-50. Beginning of the year, if we work in the beginning of the year, definitely more buyers than property.
How would you describe this type of competition in market then compared to previous years? Do you think that there's more heat at the moment?
I would say, again, in certain categories, yes. In our market, it's still quite hot because, average price in, let's say, in one of our suburbs is nearly $800,000. So it's very, very competitive. So it's a lot of heat. And in most cases, whatever the listing price is, it would probably sell for more than the listing price.
Eleanor, what are we expecting to see, for the rest of October and November? Are we able to predict perhaps which capital cities or regions might see more homes for sale?
So certainly spring and early summer are typically the busiest time of year for property markets, with increased numbers of properties listed for sale relative to other times of the years. And this spring is certainly shaping up to be broadly busier than last year with respect to new listings volumes. And as a result, buyers are really enjoying a lot more choice. We're already seeing that is working to slow the pace of price growth, and it's working to slow the pace of price growth quite significantly in some markets. Now, I think we're likely to see this dynamic continue over the months ahead as the spring selling season continues to unfold. So we're likely to continue to see prices lifting at this more modest pace. We've still got some uncertainty around the timing of interest rate cuts. We've got those affordability constraints weighing, and we're going to continue to see an uplift in new properties hitting the market as well.
And Peter, what about for you? Are you having any conversations with prospective sellers about coming to market in the second half of spring, or are most people already on market?
A lot of them are on the market. The people that we're talking to now, which really do not want to, come on until, let's say, first quarter of next year. We normally in our area, and especially our office, we do. It's called a 1st of January launch. So those owners are basically now getting moved over to the 1st of January. But we are trying to push a lot of owners to come on now because we think that prices are still very, very good. But just giving our vendors and sellers just the flexibility with their settlement terms. So, a lot of them don't want to move out before Christmas. No issues. We'll provide a 3-month settlement and then move them out in say, January.
Eleanor, what do you think about the opportunities for first home buyers this spring? Are we seeing listings come onto market that fit their price brackets?
Well, we know that prices have risen in most markets over the past year. So certainly affordability has deteriorated. Interest rates have been sustained at this higher level and growth in incomes really hasn't kept up. It is a little different though, depending on where in the country you sit. But broadly, the purchasing environment remains very challenging for first home buyers. However, even though the number of first home buyers active in the market at the moment is well off those record high pandemic numbers, the number that are active does remain above the average seen over the past decade. And the proportion of new lending to first home buyers has actually risen from levels that we saw in 2022, just before interest rates began to rise. So it does kind of point to the fact that there are first time buyers out there who are managing to overcome these affordability hurdles and challenging purchasing conditions and purchase their first home. Of course, government support schemes, concessions, grants, and the like likely to be supporting activity. And interestingly, I think we're seeing that the number of first home buyers in Victoria is at the moment surpassing all other states and actually accounts for a 32% share of all new loans to first time buyers. And there's probably a number of factors that are really helping first time buyer activity in Victoria. So one, we know that price growth has been much more subdued in Victoria, so that's likely given them a little bit more confidence to transact. Prices are pretty much held at this current level over the past 2 years. At the same time, Victoria actually has the highest share of eligible properties under the First Home Guarantee Scheme. So with that flat price growth and with the reshuffling in the rankings that we've seen of Australia's most expensive capital cities, Victoria or Melbourne actually has the second highest property price cap, but is not the second most expensive capital city market at the moment. So more than 50% of homes are estimated to be below those price caps in Melbourne. So that increase in choice has likely helped those eligible first home buyers for the support scheme to take it up and purchase in Victoria. And it's probably one of the reasons why we are seeing that number one, take-up of the scheme was highest in Victoria over the past financial year, but also first home buyer activity has been strongest in Victoria.
Peter, what are your thoughts on that? How are first home buyers going in your patch this spring?
The number that I mentioned before about having the 44 first home buyers, we do a lot of our stats to see where they're all coming from. Now, if we did a bit of a study on the 44, there was nearly just over 30 that don't live in the area. So a lot of people we're finding now, the first home buyers are trying to get into the market. So we're getting people that are moving into our patch that are out of other areas, which may not want to be there, but they're pushed into that corner because they really want to get their foot in the door.
Eleanor, I'm pretty sure it was you and I who spoke about this maybe a year ago. We chatted about that the most homes sold is actually in November. Correct me if I'm wrong. Is that the peak of spring selling? And also, why is that? Is that because, a little bit of FOMO? People are like, oh my gosh, I've missed out in September, I've missed out in October. November's kind of like my last big chance before the end of the year.
So September, October and November are typically considered those spring selling months, I guess. And certainly with new listings volumes picking up in spring, so September, October, and the time that it takes for people to find the property that's right for them, it does kind of make sense that November is typically the peak of the spring selling season. And we do typically see that reflected in our data, that there are more buyers active and transacting. I think probably the timing of the Christmas holiday period plays in a little bit there, with people kind of racing to get in ahead of that seasonally quieter period that we see over the Christmas holidays.
Peter, is that typically what you guys see? A little bit of a late surge in November and then things might peter out when people go on Christmas break?
Yeah, ours a little bit different. We're finding that probably October is probably our peak. That's when all the buyers have come out, and then it dripples through to November. And we find probably when you get to that third week of November, things start to slow down. We're finding now, like even just like Christmas parties and that, everything's now brought into November rather than December. So people start to switch off. I looked at the data only around probably a couple of weeks ago where November was always pretty solid, but we're finding that in our market, it's just fizzling out a lot more. Every year that goes past, it's just less buyers. Beginning of November, great. End of November, horrible for us.
Eleanor, in one word, how would you describe this 2024 spring property market compared to other years?
I'm going to go with varied. So I'm keeping in theme with that difference that we're seeing in terms of performance across the country.
And Peter, what's your advice to current property seekers, given that we are in a challenged market?
Two answers to that. If you're renting a property, you need to get into the market. Now, it may not be in the area that you like, but I would recommend getting your foot in the market. If you look at the data, I always say to people, look at 12 months ago, look at 24 months ago. You need to get your foot into the market to basically, buy that first home rather than, renting a property. And again, it's for other buyers. If we're getting now to spring, I would be recommending buy now, settle even before Christmas, get settled in rather than probably the first quarter of next year.
All right. Well, thanks so much for coming on, and I really appreciate both of your time and your insights.
Thank you for having me.
Thank you for having us.
Thanks for joining me. This has been Real Talk. For your weekly fix, please follow wherever you listen to your podcasts and tune in next time for more real questions, news and insights on the topics that matter most from realestate.com.au, Australia's #1 address in property. All information provided is general advice and opinion based on current market conditions. These opinions should not be treated as investment advice. Always obtain advice based on your individual circumstances.
Real Talk acknowledges the traditional custodians of country throughout Australia and their connections to land, sea, air and community. We pay our respects to elders past and present.